Happy New Year, everyone. It's Amy and Adam from EriksensGlobal here. So last year, a lot of equity markets had amazing rallies. We saw a lot, obviously, on the back of AI. Lots of investment there, but also lots of productivity gains anticipated, if not quite realized. And then you also had China announcing some stimulus. You had EU, European financials, having a bit of a comeback there, which was exciting. And then there was a lot of geopolitics, which mixed things up with Japan's stock market as well. But what was really fascinating was the gold and silver rallies, right? Because we saw triple-digit returns from silver, which is quite, it doesn't happen all the time.
No, it's pretty crazy.
So tell us what drove the rally there.
Thanks, Amy. I think a lot of it came down to a few things, one of which was a pickup in expectations for central banks to start adding more gold to their reserves, as well as those ongoing fears of resurgent inflation and a devaluation of the US dollar.
Yeah.
So we saw huge increases in demand for gold ETFs, particularly in North America.
Yeah.
That's one of the big sources of demand, and obviously it's a bit more accessible than physically buying gold.
A bit more accessible, but a little bit less secure, indeed, because you're not directly holding the asset.
Precisely. And also ripe for speculation. You get a lot more speculative retail interest through that avenue than you do through physical gold.
Yeah.
And silver, obviously, is the one that had that really, really big rally. Now, silver lagged gold for most of the year, but historically we see that their returns are usually quite well correlated. And in the last couple months of the year, silver had a bit of an insane rally, picking up nearly 50% just in November and December alone. And that was on the back of all of those themes I mentioned about gold, but also added pressure mainly from industrial demand.
Yeah.
So as electrification continues, the demand for silver is just going to keep pushing that price up.
And when the value of the commodities go up, the miners also go up. So we saw a lot of rallies in mining stocks too. Now, another thing about the gold ETFs, there's a bit of pressure on the central bank chair, or poor Jerome Powell can't get a break. So we've been watching that, haven't we, with the kind of criminal case that's been raised. And we're expecting the rise might continue.
Potentially. What you're seeing in the US right now is pretty shocking. We're seeing Jerome Powell pretty much become the target for criminal investigation from the Department of Justice.
Yeah.
And Powell came out in a video and said that this was essentially a pretext for an attack on the independence of the Fed. And you've seen a whole bunch of reserve bankers, including the governor of the Reserve Bank of New Zealand, sign on to a letter in support of the bank. But if we do see that attack continue, then some of the things that could happen could be a further devaluation of the US dollar, or actual, realized inflation risks if the central bank is forced to cut rates too aggressively. Both of those are the kind of thing that could see gold and silver continue that rally.
Yes, moving towards stability, which we'll see about. And then over in China, 4 trillion yuan is the new stimulus amount that they're popping in. But what's an interesting fact while I was doing my research is that at the moment, corporate debt in China is 156% of the GDP. So stimulus is about 4% of the GDP. Corporate debt dwarfs that. So that's one to watch in 2026. If you want to know more about what we're thinking and looking ahead, you can subscribe to our economic commentary, and that will also tell you more about what we've talked about today and also what we saw in the last month and the last quarter of the markets. Okay, talk soon.
See ya.